Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. Returning guest on the program today, Brad Cooke, CEO of Endeavor Silver, a Mexican-focused silver producer. Brad, welcome back to the program.
Thanks for inviting me, Colin.
Yeah, Brad, you have a lot of great insight. In fact, we were just chatting before we hit record on the interview, and we're going to have a macro-focused discussion today just around what's happening in the silver and gold markets, and of course the silver and gold equities. Last week was a bit of a rough sell-off, and I think investors are really starting to get shaken and worried about if this is in fact a bull market. And oftentimes when sentiment gets to that point, we can see a change in course. So Brad, first I just want to ask what your overall view is of the gold and silver markets.
Colin, people normally have expectations based on the recent past, and we came off of the cyclic bottom in December, January of a year ago, and the bounce last year was completely unpredicted. Some spectacular gains in gold and silver, really just recovering off of a cyclic low. And that, of course, has affected people's expectations for the performance of gold and silver, and inversely to the U.S. dollar this year. In fact, gold and silver are up on the year modestly. So I think it's pretty clear that we've entered into a new phase of bull market phase of the gold and silver markets. But we gave up most of the gains from last year, and that's, I think, a little bit disappointing for gold and silver investors. Near-term outlook, I think we can see clearly support on the charts for gold and silver in the $1,200 range for gold and $16 range for silver. We're not there yet, but I think we're going to go back and visit that support level here shortly. I don't see much fundamentally to change that picture over the next few months. Maybe some consolidation and a modest move up off of that support line. But my view on the rest of the year is that the U.S. Fed has set a course of quarterly rate increases that is significantly faster than the pace of economic growth in the U.S. And that's a formula for stagflation and recession. So at some point, I think the Fed is going to have to hit the pause button. Whether it's June or September, I don't know, probably September. But when that happens, people will be thankful they own gold and silver.
Well, Brad, if one were to use the Dow and the NASDAQ as a barometer for the U.S. economy, and gold and silver potentially as a way to protect against downside in the economy, you would look quite insane investing money in gold and silver right now, because the Dow and NASDAQ just keep marching up. Even after Trump got into the White House, things have been even more rosy now. What do you make of equity markets continuing to move up?
Well, of course, the U.S. dollar and U.S. equities have been the main beneficiary of the Trump administration so far, which is admittedly mostly talk and not much action yet. So the promise of tax cuts, the promise of immigration ban, and the promise of repealing Obamacare, which has now finally happened last week. These things have really helped boost U.S. equities. But how much more can they? I think we're into most likely see a rounded top on both the U.S. dollar and U.S. equities over the coming months, just as we'll see a rounded bottom on gold and silver, because they are inversely correlated. And then we'll see.
Well, when you have strength in so many assets, you look at the U.S. dollar you just mentioned, as well as the equities. You can even look at real estate in Canada and the U.S. Really, one of the only sectors that does not have a whole bunch of money inflating it right now is the gold and silver sector and the associated equities. Do you think that money has to come out of the dollar and has to come out of the equities for us to get a real major and sustained rally in gold?
Well, I do, because of the relationship between the dollar, equities, and precious metals. So think about it this way. Right now, there's very few Wall Street investors who have any interest or ownership of gold and silver instruments. And my best guess is that over the coming months of consolidation, like I said, the rounded top on the U.S. dollar and equities and a rounded bottom on gold and silver, that's the period of time when sophisticated investors start buying insurance. They're a bit nervous about the equity market. and they're looking at how beat up the gold and silver market is. And so that helps round the top in equities and the bottom in gold and silver. Big institutions slowly picking up some insurance in the gold and silver business. And again, my view is that gold and silver are still dictated by the direction of the U.S. dollar, and my feeling is that the dollar will probably have to correct late this year, simply because the economic growth that the Fed is forecasting isn't there to the same degree.
Brad, you've been involved in the mining sector for quite some time and are well aware of how bull markets unfold. The mantra of 2 steps forward and 1 step back is almost always the way it goes. And if you look at the stock chart of Endeavor as an example, you can look at a low a little over a year and a half ago that is quite a bit lower than where the stock is at right now. And so you had a major rally and then some of those gains being given up. How much more selling do you think can happen in these equities, and is there any chance of us going back to those lows that started this bull market?
Well, of course, anything's possible in this world, but we deal in a world of probabilities at Endeavor, and the stock itself briefly hit a low of $1 US in January of 2016, and actually peaked above $5 US in August of last year, barely 8 months ago. So while anything's possible, we're currently trading at around $3 US, which is about halfway between the low and the high in the last 12 months. I think that's an appropriate support area for the stock, and we have to keep our focus on just building a solid business, growing our production, managing our costs, and hopefully improving our profit margin. That's the whole goal of running a business. We've had a tremendous success in reducing our costs these last 4 years. I think we're the only silver company to reduce our all-in sustaining costs every year for the last 4 years. We did not grow during the bear market. That was a deliberate decision not to push more metal out and deplete our main assets during an environment of falling prices. But now that I think we're in an environment of rising prices, we're very much focused on growth. We picked up 2 projects last year that we believe have production potential. We've discovered a third one that clearly has production potential. And we're now in building mode. So through the course of the rest of this year, Endeavor's focused on getting construction starts on the 4th mine, El Compás, and our 5th mine, Terronera. Compass will actually be up and running by year-end, and Terronera by the end of 2018. So a renewed focus on growth here at Endeavor.
And Endeavor is primarily focused on silver. Silver, up until a couple weeks ago, was experiencing very low volatility, and I noticed a lot of people weren't really focusing on silver as much as they had in the past, and maybe that's because things had gotten a little bit boring. But there was a good bit of a sell-off the last couple weeks, and silver is now embroiled in what you could consider 6 years of a bear market. Or it's at least been 6 years since we hit that peak of $48 an ounce. And I've heard some people talk about what happens after you have a commodity or any asset go down for that long. You must be excited by the prospects of silver when it does turn around.
Oh, very much so. Silver is the poor man's gold. Gold typically leads, silver follows. Silver is a much smaller market than gold. And if you consider that the total turnover of silver bullion each year is about 1 billion ounces, and silver currently trades for 16 and change per ounce, that's a $16 billion business worldwide. It's tiny compared to the market cap of Apple is $750 billion or some darn thing. Therefore, it's a very volatile metal, and that's great news on the upside. We have, I think, a reasonable expectation that silver will continue to make gains versus gold over the course of the next bull leg. That's what it does. And ultimately, the targets for silver are significant multiples of the current price.
Brad, let's wrap things up with your discussion on the Fed and potential rate increases coming at the end of the year, something that you think, if are not followed to plan as the Fed's laid out, could start to drive the price of these metals up. And you told me before the call that you think the end of the year might be quite nice for mining investors.
Yeah, I think this concept of gold and silver sitting on support and the U.S. dollar and U.S. equities bumping into resistance suggests a rounding out during the summertime. And if the Fed does hit the pause button in September and say, no, we're not ready for another rate increase, then the bigger funds who are overexposed to U.S. equities and underexposed to gold and silver will very quickly make the switch. So I think we'll see a nice move in the gold and silver metals and equities in the last quarter of this year.
That would certainly be exciting. Brad, thank you so much for coming back on the program. It's always a pleasure to have you here at Palisade Radio. Look forward to getting you back on the program later this year.
Lovely. Thanks, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?